You're watching the analysis report by FinancialMirror.tv. Russia's central bank vowed to defend its floor for the ruble on Friday as the currency sank to fresh record lows, and its finance minister outlined forecasts for a year of no growth and a hefty budget shortfall. The ruble fell to 40.16 versus a euro-dollar basket, just 2% away from the 41 level signaled by the central bank as the boundary of its trading ban last week, as it tried to put an end to 2.5 months of weakening. Russia has allowed the currency to lose over a fifth of its value since November to adjust to a dive in commodity and oil prices and the worst economic outlook in a decade. But making the fall gradual has costed a third of its currency reserves. Officials now say the currency is near fair value, but markets are expected to test the central bank's resolve to defend the new trading corridor, especially as it has already spent a third of Russia's reserves on ruble support. The central bank chairman affirmed the regulator's commitment to the band, saying it will be defended with market interventions and interest rates. The ruble also sank to fresh record lows of 46.40 per euro and 35.54 per dollar. The deputy prime minister said on Thursday it could weaken further to 36 per dollar in the current climate, but added that Russia's ruble policy had not changed and the adjustments which have happened were necessary corrections. The finance minister said this year would likely bring zero growth, a budget deficit of 6.1%, and capital outflows of at least $100 billion. Though glum, his outlook was brighter than some expected. Russian newspapers had reported that the deficit would be at least 7% this year, while some analysts expect the economy to contract by as much as 3%. With such an outlook, Russia's remaining $386.5 billion of currency reserves are a key asset which will enable it to prop up the economy, plug holes in the budget, and defend its currency. Concerns over the reserves, though, are offset by political pressure to avoid an overly sharp depreciation. Ordinary Russians are very mindful of the last major crisis in 1998, when the currency lost over two-thirds of its value in a year. Another way to help the ruble is for the central bank to limit its liquidity offerings to the banking sector, which could potentially prompt banks to start converting dollar and euro holders back into the ruble. On Friday, the central bank slashed the money on offer at its first daily repo auction by 100 billion rubles to 375 billion. Bids at the tender exceeded supply by over 50%. Thanks for watching FinancialMirror.tv.